All right, team, how you doing? This is Renzo again from Task Force Financial Freedom, or TF3, and today we're gonna do another review, another recap of today's trades. I'm here with Mike again. He's been killing it today. He's told me he's made way more money than we expected today. But today we're gonna talk about our quick analysis, and we're also gonna talk about chart patterns, specifically about triangles. Okay. So let's take a look at our analysis for the day. I'm going to use the 1 minute candle, the 1 minute chart right now. So each one of these candles represent a one minute of price action. Let me move this camera out of the way. Okay, so what we did today, Mike, do you remember? We established the high of the pre-market was this this dotted line, right? So we say that if the price breaks above the high of the pre-market, we will place calls, and if it rejected it and it went down below the moving average, then we'll be playing puts, right? So we did a quick market analysis, and we identified that we had support right here, we had support right over here, and we also had some support right over here. We should identify all this area because look at the pre-market. You know, it went up, went down to this point, went up, went down, so it was kind of in a range. So that was a valid point of entry anyways. So what happened this morning? The market opened, right? And I'm showing the 1 minute chart because I want us to talk about what we did today minute by minute. So market opens, and it's right here. We know we have a pre-market high. We did the same strategy we've been doing since last month, pretty much breakouts, right? So it breaks above the moving average, and what happens? Not only stays above it on the next candle, but we have a reversal, right? So we have a reversal. By the way, this is the Nasdaq. So we get a reversal, and we place calls, right? We bought calls. And we rode them all the way to maybe over here, I think, and then we got out. And the reason we got out is because we started seeing all this rejection, right? So all this rejection, all this consolidation, we didn't know if it was a fake out and was going to drop down like it did yesterday, or it will continue to go up. So what we did is we got out and we waited. Then it did this bounce. It had some resistance, came back down, and it came back up. And this is when I think we did a few puts and a few calls, and it might not look like much, right? For somebody who says, well, I mean, this move right here is like insignificant, but a move from here to here is maybe, we're going to be conservative, $50, right? Could you say that could be a $50 move from here to here?
Yes.
So if you do, watch, 50, 50, 50 and 50, now you got what, $200, right? So you got $200, and the market is only open for 20 minutes. So if you do $200 every day consistently, right, you're gonna have how much in a week if you do 5 days in a week?
$1,000 a week, and then 4 weeks.
You got $4,000. You got
$4,000 a month.
You got $4,000 a month, right? Working from your home and just playing it safe, right? So that could be a good, a good income for somebody. And the main thing is not to be greedy. So let's talk about what happened over here. So as soon as it started doing this highs and getting rejected, we quickly said, okay, it looks like it's forming an ascending triangle, right? So I'm going to make this thicker. I'm going to make this line thicker so that we can see and understand just this part. So what is an ascending triangle? Ascending triangle is one chart pattern where the price comes up to a point and it finds resistance, but when it comes down, it fails to go all the way down, and it looks like the price is squeezing inside a triangle, right? So we have this top, we have this top, but the price never comes down all the way, right? So it's staying above this lows, and it starts squeezing, right? So we can see that on our TTM squeeze here at the bottom, where the price is coming up, and now it's like in this area where it doesn't know which way it wants to go, and we can actually see the red dots right here. Okay, so red dots for the TTM squeeze means that the price is getting squeezed into a point where it's going to explode to one side or the other. So what is the theory of any triangles? If it's an ascending triangle and the price breaks above the ascending triangle and it stays above the ascending triangle, then it has a very good chance of doing a push higher and much higher, right? But it doesn't mean that if it's in an ascending triangle, it doesn't necessarily mean that it's going to push to the upside. Because if it fails the ascending triangle, now we have a substantial push to the downside. So check this out. We have an ascending triangle. It was well established. And then it breaks below it. We have a reversal, and we actually play call puts here, right? So we shorted the market. So as soon as it broke outside the triangle, we waited for the next candle. So we got this candle, and we pushed it all the way to, actually we got out somewhere over here. And the reason we got out is because that we know that could be support because it was previous resistance, right? So right now we have one transaction, two transactions, three transactions. So those three transactions, right? By the time we were here and you got out, how much were you up for the day?
I was up maybe, let's see, the first trade I did, I made like 600 something.
See, look at that. 600 something, right? Just
and that was like 5 minutes after the market opened.
That was, and why did we do that? Because we played this breakout safely, right?
Yeah, we were conservative, and we had to wait whether that candle was going to stay above
the pre-market high. Right, and that's exactly what we do. We got to stay true to our plan for the day. Because remember, we don't plan to fail, but we don't need to fail to plan. We need to have a plan in place, but our risk has to be very tight. Okay, so for example, if we bought as soon as the market broke above the pre-market, our risk to get out if this was not a good trade was if it went back inside the pre-market, right? So if it went below the pre-market, boom, we get out. And I actually took a few losses. I think altogether today I lost $40 because I went into trades and it took me out and I got out quickly, and that was like a $10 loss and then a $20 loss, but then I made up my losses. So today I'm over $1,000 also on my trades. But anyways, let's review this triangle, the first triangle of the day. Okay, and today is the 15th of April of 2021. If anybody is wondering when we're doing this video, we just finished trading. At least I just finished trading. I don't know if Mike, you're still on the trade or not, but you did very well. You did very well today, and it's only 10:48 in the morning, man. Come on. All right, check this out. Ascending triangle. Price broke outside the to the upside, and it passed the pre-market high, and then we played calls, and then once we started getting resistance, we got out, and then we see that the price is going up to this top, and then the price is not going down, and we can see clearly, right? If we draw the bottom of this price when it opened to this low, we can clearly see a triangle. Right? We're not making this up. It's a triangle. So we waited and we said, if it breaks above the triangle, we have this resistance right here, right? And if it breaks above the resistance, we have this high of previous days. But it didn't. So it fell and it went down, and we took advantage of that. So now it comes here, it has one bounce, it has two bounces, boom, it goes back above the pre-market high, and as soon as it does that, we get a reversal indicator. So we get in and we wrote it. I said we're gonna ride it all the way to this high, right? So we got out and we made a chunk of money right there. I think you made more money than I did. I don't know why it only gave me half of my profits, but it's okay. I mean, profits are profits. So now we get in there and we're not sure what's happening, and we start developing another triangle. That's why we need to apply all of the things that we're learning throughout the day. It's not just for pre-market analysis or post-market analysis, right? We need to make sure that we're doing this all throughout the day. All right, so what happens here? We come to this same high as here, right? So we know we're going to get out because there's a good possibility of rejecting it. So the market comes down and look, boom, it gets stopped right here. It comes up, gets rejected, comes down. So now we say, okay, well, check this out. Let's connect the dots. And we got another triangle, right? So we got another ascending triangle, right? So when we have another ascending triangle, in this case, right, we say the theory was that if it breaks above it, it's going to continue to go up. If it breaks below it, it's going to continue to go down. So let's look at this. On the first scenario, it fell and it went down. But on the second scenario, it actually went above the triangle and it stayed above it. So we played this call too, and we got out. So I got out somewhere over here because we know we're in this area of resistance, right? That we identified pre-market. And look what it's doing. It comes up, boom. Now it's reversing. Okay, so I'm not in any of these trades. I don't know if you are. I'm not. But it's you know, I don't know how much it's going to reverse. It might come back down to this areas right over here, this area, because look, intraday it was resistance, so it could be support. But if it breaks, if it bounces and it comes back up, if it breaks, now we know we have this other area. And why am I'm pointing at these areas right here, which is the high and the low of previous days? Just because of that. So those are points of reference that we have on the screen. So let's go to yesterday. Okay, so this is yesterday, and the market opened, right? And look at where it opened. It opened at this high of the previous day or previous days, and then it came down. So this is from yesterday, and we did some puts and then some calls and then some more puts, right? So we had all these areas that we identified pre-market. We didn't do this during the day. We did this pre-market, and it actually worked out. Those were areas of reference. Remember, we got to remember that this is just reference points, but you know, it's just for a reference. So we still have to understand price action. So it actually broke down below all of that, and look, it went down to another area that we had identified, and then it continued throughout the day. It broke that area and it came down, and look where it came down to. It came down to our third area, and our third area actually has that low of previous days, and it tested it a couple times, 1 time, 2 times, 3 times. So those are points of reference. So that's why I like to keep it on my chart, because for example today, right, we know that if this continues to go up, we have a point of reference, which is right here. So if it takes out this resistance line or resistance area, it could come up to here. But anyways, I'm done trading. You done trading, or are you still trading?
No, I am done trading.
So how do you do today?
I made $1,750.
Get out, man. Get out of here. Good job.
My best day trade.
You bet. So every day you're getting more proficient and better, and you're getting more comfortable with selecting your entries and your exits, right?
Yeah. This week, every day, I made at least $1,000.
Nice. That's nice. So let's take a look at the chart. This is the 1 hour, and I selected the 1 hour, to see if we can identify more triangles that can validate what we're talking about today. Okay, so ascending triangles. Let's take a look at this right here. Okay, this day right here. Okay, this area right over here. So for triangles, you have to be patient, and you have to like really look into them. Okay, so let's take a look at this right here. We're gonna draw a line like this. But if we connect all of these lows, check this out. We have an ascending triangle, right? So it's a long-term ascending triangle. So we know that if we're day trading it, we could be going up and down and up and down. But on this day, we said, okay, well, it already broke outside the triangle, so it has a more probability of going up. And that's what it does, right? So market opens, it comes down, it bounces, and boom, it goes all the way up. So we got to identify this also pre-market. Let's see if we can see a descending triangle. So if an ascending triangle is going up, a descending triangle is an area where the market continues to go down, but it finds a bottom, right? So it finds a bottom and it doesn't break below the bottom. So let's see Let me go to the 4-hour chart and see if we can identify a descending triangle. Okay, so kind of like this right here. So we have this bottom right here. This is the 4 hours, okay? And if you connect the tops, you can see that the price is going down, right? So instead of going, you know, this is the opposite of the ascending triangle that we just talked about. So let me make this a little bigger so we can see it. Okay. Okay, so what is the theory? The theory is that if it's a descending triangle, it has a more chance of going down, right? If it breaks outside this triangle, see, comes down, bottom, but the highs are getting lower. So if this broke outside this triangle, it'll continue to go down. But in this case, it fell and it broke outside, but to the upside. That makes sense? So a descending triangle has a higher chance of going down, but it doesn't necessarily mean that it's going to go down, because it could fail and break out to the opposite side. Let me see if there's another good example of triangles. No, but I have another example. Now this is a symmetrical triangle. So now we see an ascending triangle. It has a top, right? And it's trying to break it. So if it breaks through it, continues to go up. But if it fails, it goes down. At descending triangle, we have a bottom, right? Now we have another type of triangle, and it's a symmetrical triangle. Okay, a symmetrical triangle means that it has equal size. So let's take a look at this example right over here, okay? If we look at this example right over here, we see the high and the low of this day, right? And during the next couple of days is stuck, the price stuck inside this triangle, right? So in this case, it's gonna go up one way or it's gonna go down one way. But what's the difference? Since we have equal size, now we have a target to the upside, which is the high of this, right, the beginning of the triangle, and we have a low, which is the bottom of this triangle. So we got to be very careful when we play this. Why? Because if this was a small time frame, we could only have maybe a couple of points to the upside or the downside. But let's take a look at this example. It's a symmetrical triangle. We see that the sides are equal. In this case, it breaks below the triangle and it stays below for a couple points, right? But if it was to break to the upside, it could have broken up to the upside to this level over here. Okay, so we have a few, there's different triangles. They're called wedges, channels. People call them different things. But the bottom line is that once you identify, once you see them on your chart, you should be taking note of that, because once it breaks to one side or the other, it's gonna have a move. Okay, so let's take a look at this right here. We're on the 15-minute chart. Look at all this right here. Resistance, 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 right? So we're gonna say, okay, well, that's a very good point of resistance. So we're gonna make that our top, right? So we have a line right there. And now let's take a look at the bottom. Let's see what's going on at the bottom, right? So at the bottom, we see that even though we're having resistance, look at this low, look at this low, look at this low. So the lows are getting higher, right? So this low is higher than this low. These lows are higher than this low. So let's connect the dots right here. Let's connect all the lows, right? And look what we got. We got another ascending triangle, right? So if we're gonna take a look at this, we see, okay, 1, 2, 3 days. So the triangle is already developing, right? So now we gotta see, during these days that is inside the triangle, we're gonna play bounces to the upside, down, bounces to the downside, bounces to the upside, down, bounces to the downside. But now we know that we're getting squeezed inside this triangle. So now we said, okay, if it breaks above the triangle, it has a higher possibility of continuing to go up. If it breaks below this triangle, we have point of reference number 1, and we have point of reference number 2, because it's the low of this and this other low. So what happens? Pre-market, boom, it shoots outside the triangle, and now we say, okay, we're gonna play it to the upside, and then we wait for the market to open, comes down, it forms a base, and it shoots up. This is actually a day where we traded to the upside, and we did a call, and then it came down to the area we identified and went back up. So we have to note and notice all these triangles, because it's going to help us make a more educated decision when we're trading. Okay, we can potentially say that this was a descending triangle, maybe not, but anyways, so today we're right here, right? And if you look at from a different perspective, we are in a bigger triangle, right? So the price is coming here, but it's getting squeezed inside all of this area right over here. All right, so that's triangles, man. I know it's a lot of information, but it's the more you practice, the better you're gonna become at triangles, and identifying them and making sure that they work for our trades. Okay. Any questions?
No.
Do you get the concept of the triangles?
Yes.
All right. Hey, you've been doing great, man. Good job. This last couple of days, last couple of weeks, actually. Do you know how much are you up since you started? Like a few weeks ago?
Last time I added it up, around 5,000, but now I got added this week.
So you're probably like 7,000 up, right?
Probably. I gotta add it up all again and all that stuff.
Nice. Good job. Good job. My wife is still trading. She's actually trading the SPY or the S&P 500. So we're tag teaming. I do the NASDAQ. She does the S&P 500. But anyways, okay. So keep watching the videos. Share the videos with your friends. Keep practicing. Practice even after the market closes. Even if you're not trading, continue to practice, because it's just gonna make you better. Okay, great job so far, and same time tomorrow. Tomorrow's Friday. Yeah, we're trading tomorrow too. Okay.
Okay.
Take care. Bye.
Bye.